In today's video, I'm going to teach you what to transfer to a new QuickBooks. If you're setting up a fresh QuickBooks company and want your day-to-day work to continue smoothly, the key is knowing exactly what to bring over and how to start building it in the new file. Broadly, you'll want to transfer your core lists, your accounts, your balances, your transactions, and your essential settings. That means customers, vendors, employees, and products or services, your full chart of accounts, account and opening balances, including any inventory quantities and values, invoices, bills, checks, and deposits, plus company information and tax settings. With that big picture in mind, let's begin filling in the most commonly used lists. First, go to your QuickBooks homepage. This is your control center in the new company, and it's where you'll access lists and tools as you rebuild your data. Having your old records handy, whether exported lists or a prior file, will make this much faster and help you maintain consistent names, account mappings, and tax details. Now, open the customers area and add your customers. Click Add Customer, enter the customer's details, and save. Focus on clean, accurate names, primary contact information, and any relevant terms or tax preferences you used before. Saving each customer as you go helps you steadily rebuild your customer list and prevents mismatches when you create new invoices later. Next, move to the vendors or suppliers area and add your suppliers. Click Add Supplier, enter the supplier's details, and save. Consistency is crucial here too. Use the same naming conventions, default expense accounts, and payment terms you relied on previously so your bills and payments continue to post to the correct places. Then head to your products and services list and add the items you sell or purchase. Click Add Product or Service, complete the item setup, and choose Save and Close. Be careful to map each item to the right income, expense, or inventory account. If you track inventory, include the correct starting quantity and as of date, so on-hand counts and inventory values line up with your opening balances. As you work through these lists, keep your broader transfer plan in view. Your chart of accounts should mirror the structure you trust, because everything else points to it. Opening balances establish where you're starting from in the new file. Historical transactions like invoices, bills, checks, and deposits ensure continuity in your receivables, payables, and cash activity. Finally, company information and tax settings should match your official records so forms, reports, and filings are accurate. By methodically adding customers, suppliers, and products or services and aligning them with your existing accounts, you create a solid foundation. From there, bringing in balances, transactions, and settings becomes far simpler, and your new QuickBooks will be ready to support everyday operations with confidence.